Thanks for tuning in to this broadcast of The Resilient Advisor. My name is Jay Coulter, and joining me today is Mike Akins, the CEO and founder of ETF Action, a platform that provides actionable ETF research, data, and analytics. On this episode, Mike and I are going to geek out on the power of using ETFs to build stock portfolios and do research. Longtime listeners know in my consulting business, I help financial advisors build stock portfolios, and we leverage ETFs to get that research. Mike has built a platform that makes it so much easier. I'm really excited to walk through this process and show off a little bit of your platform, Mike. Thanks for coming on.
Awesome. Excited to be here.
All right, let's start off with this. Could you give listeners a 30-second bio of your background prior to starting ETF Action?
You bet. So I've been in the finance industry now for 20 years. Last 10 years, I was the head of ETFs at Alps Advisors, oversaw everything that had to do with on the ETF business. So we did portfolio management, product development, research, all that good stuff. At about 15 billion in assets under management and about 25 different ETF strategies that we manage on a daily basis.
Yeah, Alps was really one of the leaders in developing ETFs and ETF distribution when they really started taking over the market, weren't you guys?
Yes, we were. Yep.
Excellent. All right, so let's dive right into this. Let's talk about what it is about ETFs that make them excellent research tools for financial advisors who, in particular, let's make this narrow, how they can use it to build stock portfolios and do stock research.
All right. First, that's a great way to start, and I will keep it directed at the idea of stock selection. But I think broadly, before we get too far into this, I think we have to think about, in the big picture, what have the largest asset managers in the world done in the ETF space. Basically, they've taken all of the money and talent and resources they have, and they've mapped the markets into an ever-growing segments of investable securities, whether that be broad total market indexes or factor-specific quality dividends, whatever it may be, themes, you name it. ETF managers have taken that resource to build out and create an investable market of these different themes and strategies. In doing so, by law, by rules of the SEC, they have to provide that information transparently to us every night. And in doing that, they have created a wealth of predefined universes for us to utilize in doing stock selection, as well as investment vehicles that are great investment vehicles. But in particular, we have a gateway into their line of thinking and these great predefined universes of securities to select from.
Yeah, I mean, the market's been sliced so many different ways leveraging these products. All the data is available. It can be hard to extract, and that's what your platform really helps advisors be able to do in a systematic way, correct?
Correct. We're looking to leverage that transparency. We have data licenses from industry leaders like FactSet, and then we take and we aggregate all that data into the ETF level to let advisors quickly and efficiently understand macro level aggregated data, and then zoom directly into the underlying securities to find and filter based on what best meets their objectives.
All right, so let's nerd out on this. Let's go through an example. Listeners, you're not going to be able to see some of the screen, but I'll try and talk you through it, as will Mike. At the end, we're going to give you guys a special offer from ETF Action. They are offering extended trials here during this crisis for financial advisors. As several other fintech and wealth tech companies that have come on this show in the last couple of weeks, they're expanding their trial period so that advisors can leverage the technology to help their clients through this crisis. So I'm going to pull up the ETF Action screen for listeners. The example, and I didn't tell Mike what we were going to do beforehand because I wanted him to walk you guys through this as though he was almost doing a demo for me. So I'm a financial advisor, and I've been using DVY in this example, the Dividend Aristocrats ETF from iShares. Mike, if I wanted to slice and dice this up because I didn't want to pay the DVY management fees anymore, but I still wanted to use the thought process, how could I leverage this tool?
So first and foremost, you're in our ETF terminal, which has all listed US ETFs in it. You've selected DVY. It's opened up our overview screen. And now from here, you have a number of different research frames that you can go through, as you see next to that overview tab. So I always like to start with just kind of broad risk statistics and look at it versus the broad market. So if we look at kind of the risk stats for DVY, we'll get an understanding of this portfolio versus its broad benchmark. We currently have it linked to SPY, but that's completely changeable. You can change that to whatever market you wanted to look at it against. Then you can kind of get a feeling for, how this strategy has performed over time. Being DVY, it's been out for a long time. You can look at your different characteristics on correlation, up, down capture, et cetera. I would note that, in this example, we're putting it up against the broad market. DVY is a value dividend play, and value has been out of market. So it's accomplished its objective, but stats versus the broader market, like most dividend value strategies or value strategies in general, look across the board. Once I have a kind of a basic understanding of the risk characteristics, I like to look at composition. Composition is probably, the biggest thing and the biggest driver of returns across markets. This being a U.S. listed, it's going to be primarily all North America, U.S. securities. But really where it gets interesting is if we look at sector and industry breakdowns, you'll immediately notice DVY has a very large allocation to utilities. That's helped in this drawdown recently, but it's something to take note of as the broad market as a whole is about 3% in the S&P 500 being in utilities. You can also put this composition up against other ETFs using our compare tab, but it would be the exact same thing just with the bars of the broader market next to it. You can also dive into each one of those and see it, but it gives you kind of a broad sense, okay, what am I getting into here? And it's clearly a defensive product. It's designed to provide a higher yield in the broader market. And in doing so, it will have a tendency to pick securities from higher yielding, more defensive structures like utilities, real estate, healthcare, things of that nature. Once I've done that, I like to look at the fundamentals. So you can get a broad sense of how this looks relative on earnings, sales, cash flow. So we always put it up. The idea of our system is to create a simplistic way to look at the data that matters. A lot of systems out there, you can create some charts, et cetera, and you can do that on our site as well. But really, we wanted to provide a framework to quickly navigate and understand. So for each key ratio, whether it's cash flow, dividends, earnings, you're going to see a 5-year chart of the portfolio. Obviously, right now you're seeing everything trading well below its 5-year averages. But you're also going to show the growth of the portfolio on the different metrics over the last 5 years, as well as estimates going out a couple of years, and then trends. And obviously, that's the one that's going to jump out of everybody right now, is to basically see that earnings trends have dropped off the face of the earth. Again, all we're doing with this data is we're taking and licensing the underlying data from FactSet, and then we have scripts that aggregate it up to give you a quick view into the ETF, and you can see that relative to compare and contrast to other strategies.
Yeah, and what it really represents is not simple data, but simple to use data. And that's what caught my attention about this platform, because while you could go find this information, and some of this information in Yahoo Finance or other subscription services you have as an advisor, it's just not as easy to use as this is right here. Now, I completely put you on the spot by not telling you which ETF we were going to dissect. I'd like to go a little further. Let's say I wanted to build a 25 stock portfolio out of this ETF. What would I do?
So first, you'd want to dive into the underlying portfolios. So if you scroll up there, you go to the portfolio look through. And this actually, we have a very big upgrade coming in the next month on this, where you'll be able to see everything as a whole. But you can look at it first by saying, okay, well, what if I want to see which securities are best performers? If I click on that performance button, now I'm going to dive directly into the underlying holdings of this portfolio. And I'll be able to see the performance across different time frames. I can sort and identify which securities, have some momentum behind them, which don't. There is not filtering on this particular screen yet. That's one of the big upgrades we're going to add, as well as link all of the screens together over the next month. But this will give you an idea of which securities are performing, underperforming, and then you can kind of dive into, all right, well, what about key ratios? So if you go back to your main terminal page.
Hey, before we leave this screen here, and this is important for folks who've been following the podcast for a while, when we take apart ETFs, I'm compilating all this data and we're putting it into Excel spreadsheets and managing all the resources and metrics from Excel. This platform is going to allow you to do this from inside of ETF Action. And I can see, especially once you start adding the momentum in here and sort functionality is going to be really impactful for advisors that leverage ETFs for research. So I'm sorry, Mike, where did you want me to go next? Back to the terminal?
So if we could also then look at the key ratios. So let's say underneath that portfolio look through, click on the key ratios tab. Now all of that data we looked at an aggregate level and saw that DVY was traded as a very cheap portfolio relative to the market. It's very cheap relative to its long-term averages. We can actually see all this data at the security level as well. We can find those securities, that are trading at the lowest, and then we can overlap that with growth rates and see which securities are trading cheap but still have powerful growth rates. Basically, the idea being start aggregate and then work your way down, right? So you find a universe of securities that look attractive, and then you can drive directly into that. And you may be, hesitant of securities with high debt levels right now. So you can sort on, debt to equity or anything. But the idea of taking it and pre-screening at the ETF level provides a lot of the data that you have out there. And in our opinion, it makes it very manageable because you're taking a very large universe of all these listed securities, and then you're sub-marketing it into different groups. We also have tools that allow you to overlay ETFs. So if you wanted to take this strategy and overlay it with a momentum strategy, you can see what names are in common, both high dividend value strategy along with momentum strategies. And now you're even further refining that concept. And really the possibilities are endless. You can overlay multiple dividend strategies to see which are most prevalent, which companies are most prevalent across all of these strategies. If you ask folks, to name 10 cybersecurity companies, they'd probably go FireEye, Palo Alto, you name it, but then they're going to stop. And I think the idea is using that ETF structure to coordinate, simplify, and expand your research really makes a lot of sense in our view. And all we're doing is taking advantage of great, asset managers, the largest in the world, and then breaking, using what they've done and what they've built in the market, using and leveraging that transparency to create what we believe is a very powerful tool to quickly do, not only ETF research, but stock level research as well.
All right. So I do want to get to the overlay stuff. Let's stay on this example that we have right now for listeners. So we're in DVY. We're now looking at some of the key ratios. So for example, if an advisor is starting to think, well, it's time to build a list right now of what I'd want to buy in a recovery, and you want to build a dividend stock portfolio, you can come into here, you can sort by dividend yield. But being a smart advisor, you may think, well, we got to check on the safety of some of these. Will the screening mechanisms that iShares, that BlackRock used to build this iShares product still be valid during the next rebalance? So you could create that second level of screening by using the dividend payout ratio to make sure that to add an extra level of security in the strength of that dividend. And you can do that all from right here inside this terminal. So with that in mind, and I'm going back to the home screen now where we can do the portfolio look through, which, Mike, is just such a compelling offering for folks that want to leverage ETFs. Tell us a little bit about these last two mechanisms inside the portfolio look through.
Yeah, so the last two is going to be growth. So you got your performance, you kind of have your ratios. The next one's going to be growth rates. One thing we're adding here that needs to be added is actually the absolute earnings per share, because growth rates, just like we've learned with the coronavirus, growth rates are relative to your beginning size, right? So if you start at 0.02 earnings per share and you go to 0.2, that's a massive growth rate, but it needs to be taken in context. Just so that little quick disclaimer there. But yeah, this is going to give you a sense of being able to look at the securities. Okay, I've looked at AT&T. I like it. The key ratios, it looks like it's a good value play. I'm getting a good yield. But what's the focus in the company? Then I can look through and see, all right, here's what's happening with their different growth rates across earnings, sales, cash, so on and so forth. And now you have a better way to further refine any filtering, any research you want to do.
Yeah, and very simple. So then the last functionality in the portfolio look through is an earnings scorecard.
Yeah, so I love, this is probably my favorite tool from a standpoint of identifying trends across different securities. So earnings scorecard is going to take by quarter. So right now it always defaults to the current quarter. You can see there's only been one company inside of DVY that's reported. But if you switch that, if you go up to the top and switch that to Q4 2019, what you can see is now you've got a visualization of all the securities inside of this portfolio across sectors or industries and see what percentage actually beat their estimates. And, at the end of the day, it all comes down to earnings and revenue when you're doing security selection. And this is going to give you a quick understanding of, if you put this up against, say, the S&P 500, what you'd find is that it's beating at a much lower rate over the last several years because value's been out of favor. A lot of these companies have been out of favor. But now as you scroll down, you can then look at the companies and see, okay, here's my earnings per share estimates. Here's my actual. Are the companies delivering on expectations? It's a good sign of management. It's a good sign of, just kind of the overall environment these securities are operating in. And it's kind of that final piece in our view of, okay, I understand the performance. Where are my momentum? Where's my trends? I got a sense for where these securities are, valuation multiples are, what sort of ratios they have on debt, their balance sheet, things of that nature. Are they growing? Are they declining? And now finally, are they meeting expectations? That's a big key, right? Because the market is very transparent with the number of analysts covering these securities, and they tend to move in the direction of, are they beating or missing expectations? And it's just kind of that final piece of adding research that folks can do in a very clean format.
Excellent. Let's go back to the path you were heading down a minute ago, how you can overlap certain ETFs to get a combination of different indexes. And for time reasons, let's keep this simple. I'm an advisor. I want to build a portfolio of, let's go with momentum.
All right. So do you want me to go ahead and direct you here?
Let's do it.
All right. So let's start with go hover over the data analytics and go to the ETF Overlap Analyzer. And we'll just put the biggest one in there, MTUM. Okay, so now I have all the securities inside of MTUM, all the data before. But where this starts getting powerful then is, let's say I'm looking for momentum, but I want the companies to have some quality aspect to it. So let's overlap MTUM with iShares' quality ETF, QUAL. All right, now if we scroll down there, we can see that there's currently, and I'm looking at a smaller screen here, 27 names.
So for listeners, what this software has done is taken the names that overlap between the momentum and the quality ETF and found that there's 23% overlap representing 27 names.
Yep. So now if you just scroll down, we can see, all right, these are the companies at the last rebalance, and these follow MSCI factor indexes. When doing one versus one, I always recommend our clients use the same index provider because it'll avoid overlap of strategies, the definitions of how they get to those different things. But you could also add 3 momentum and 3 quality and really refine it if you wanted to using this tool. But again, sticking to this simple example, we now have the number, those names of those securities that are across those portfolios. And being that there's just, I believe was it 27 names?
That's correct.
So we've taken portfolios of 100 plus stocks, and we're now have 27 stocks that exhibit per MSCI at their last rebalance, their definition of momentum and their definition of quality. So the idea being is, well, I'm capturing that momentum. A lot of folks like to, ride out the tide and, follow the trends. But then I'm protecting myself a little bit because these companies clearly have some sort of evidence of clean balance sheets, earnings consistency, debt to equity ratios that are lower, things of that nature. And I've quickly whittled down, basically 2,000 securities in the US that would qualify for these indexes to 27 securities that may be attractive to me to add to my portfolio that I'm building for my clients that meet, it's basically just really simplified and expedited that process of finding securities to do further research on.
Yeah, but in this simple example here of combining momentum and quality representing, you instantly have a 27 stock portfolio that's built not by sticking your finger in the air, not by guessing, but backed by rigorous research and the largest name in asset management. So it's a great way to start building your own investment portfolios. Mike, I want to move forward with the last thing that I wanted to discuss because we're running short on time here. We were introduced through our mutual friend, Chris Versace of Thematica Research. He is a big believer in using thematics to build portfolios. Tell me, how could financial advisors leverage this tool to drive thematic investing in their process?
So this is where it really kind of gets fun. So let's just start broad. If you go back to the terminal, we have to keep in mind when we're doing stock selection, we're looking at ETFs, just click on your member login. There you go. So under data analytics, ETF terminal. Yep. And we'll screen to it here in a second, but let's say we're looking, we have to keep in mind that ETFs have to meet certain rules of diversification. They have to meet certain rules of liquidity. They have to meet certain rules of how they build these portfolios. And as a result, the narrower and narrower you get into different themes, there may be a lot of very attractive securities you're interested in, but there also may be fluff. How do I make this so I can make it a $1 billion product or a $5 billion product? Where do I get those liquidity constraints that aggregate market capitalization? So in doing that, the index providers are forced to create and lax in their rules. They like to score them by purity, and then they have some more that are secondary. So, you're not surprised to see Apple, Microsoft, Google make their way into a lot of these thematic strategies. And quite frankly, most investors already own those strategies. So if I wanted to do something, let's take clean energy. If you go to that dynamic search bar, there's different ways to do this, but that right there, yep, just type in clean. And let's see what we've got there. We've got probably PBW, ICLN, ACEs. So you can see a lot of different strategies. If you scroll up just a little bit on that blue stats bar, keep going a little bit further. So there's 9 funds with almost $2 billion in them, right? And you can kind of get a sense for what I'm looking at with these strategies. All right, now every one of these strategies is by definition says I'm going to invest in companies that we deem to be focused in the clean energy space, whether it's solar, wind, utilities that are supporting that nature, technology companies that are supporting the build out. But what I think becomes very interesting is when you start overlapping these, you'll see that there's a core of securities that find their way into all of them, but then a bunch of securities that don't. So if we can just quickly go back to that ETF Overlap analyzer page.
Well, I don't think we need to walk listeners through it, but what you're saying is the tool gives you the ability to take 9 well-known ETFs and take their research, their data, and overlap them for portfolio securities that follow a thematic lens.
Absolutely. And what you'd find when you overlap them is that, well, in aggregate, there's well over 100 securities, probably close to 200 securities collectively in all these strategies. There's only 10 that are in all 5, or there's only 30 that are in, 4 out of 5 or 8 out of 9 in this case. And now you're saying, well, intuitively, if these same securities keep making it into everybody's definition of clean energy, there's reason to believe those are probably the purest companies. And I can take that list and say, okay, of these, I can look at and say, which do I like from a perspective of their fundamentals? Which do I like from a momentum perspective? But I've whittled this whole world of clean energy into a very small, manageable subset of companies that I can research and determine whether it makes sense inside of my portfolio.
Excellent. So you have a very generous offer for financial advisors that want to try and leverage this tool to help their advisors through, or help their clients through this crisis. Could you just briefly tell listeners what that experience would be like for the month that they're trying out the portal and what they would experience?
Yeah, absolutely. So anybody that goes to etfaction.com can sign up. No CC required. We're trying to take the true fintech model. We want folks to see it, explore it. Historically, we've offered a 2-week trial. We've only been out market with this new iteration of our system for 4 months, but we've had hundreds of people that sign up, and a number of those have become paying clients. But once they sign up, we'll get notified. They'll get an activation email. They can go in and explore. There's user guides out there, but we'll reach out and offer a one-on-one 30-minute demo, because like with any technology, it helps to get a hands-on approach and get some ideas and some tips. And what they'll find is a wealth of information. We've got over 2,300 ETFs that we aggregate the data underlying on. There's numbers of different ways to filter and screen and find ETFs. Once you find them, you can use those. You can look into the the data both at the aggregate level and the underlying level. We complement this with daily research. Our research is designed to help people think about using ETFs for implementation. I think of us as implementation experts. Everybody understands, their view of the market, et cetera. We try to help people take our data and analytics and align their macro assumptions, their client needs, their investment ideology with the right strategies. We understand the market very well from the ETF perspective, and we help people map that. So they'll get a very robust wealth of information, thousands of pages. We cover thousands and thousands of securities. We have a great partnership and license agreement with FactSet, which we believe is, a leader in data analytics. So it's very trustworthy data that we're utilizing and aggregating up. And that's kind of the idea. And once, from there, it used to be 2 weeks. They'll get 30 days to explore this. At the end of 30 days, they'll turn into a freemium account if they elected not to go into a paying subscription. But I would say that our freemium account is quite powerful. You still get all of the composition data. You still get all of the performance data, all of the fund flows data. We really just lock up some of our individual research, and then that premium data being consensus analyst estimates, earnings data. At the end of the day, we've got to pay to keep the lights on. So that's kind of how we've built this. And I'd really encourage people to give it a go. We like to tell people that using ETFs to explore the markets is truly there's endless possibilities. Whether you like to use ETFs for investing or not, their structure is great as a research tool, and that's really what's behind our vision of ETF Action. It's less about the ETF as an investment vehicle, though I think they're fabulous investment vehicles. It's more about using them and empowering them to simplify and expand your daily research workflows.
Excellent. Well, Mike, thank you so much for coming on and sharing your research, information about your tool, and making this offer available for financial advisors.
Thanks, Jay. I really appreciate it.